GM, welcome to the outlook for April. Going to do a high time frame market analysis starting with the monthly flows across all assets, diving into Bitcoin setups, altcoin setups, TradFi setups, and the max pain scenario for markets. So let's get into it, starting with the monthly flows. So Bitcoin closed the month of March green after 1, 2, 3, 4, 5 red monthly candles in a row. Now, you guys will know from my recent videos that Bitcoin rarely has 5 red monthly candles in a row or more. This was the previous example in 2018, led to the bottom. But after 5 red candles, the bottom didn't actually start pushing upwards until many months later. So it's a very long process. The first red candle was in August 2018. And the first real show of strength was in May 2019. So it takes time. That's how people get wrecked. Even when bottom signals are there, they'll still mess it up just through time alone. Here we had 4, not quite 5. And the last example where we've had 5 or more red monthly candles in a row was in 2011. Mark the peak or bottom again. Doesn't just go full bull straight away. That's what wrecks most people. But that was when the bottom formed. So signs are there for a bottom to be forming on Bitcoin. You guys know that I don't believe Bitcoin should go below 49k if it's going to continue its strength and its adoption curve in the years to come. If it is the asset that we all believe it to be, with its unique properties, being that decentralized asset, being true hard money. Because this consolidation over here was the first accumulation that the ETFs were present in. ETFs launched over here, they marked price up to all-time high, and this was your first sign of demand coming in on Bitcoin. This was institutional flows, Wall Street now all coming in. That accumulation led to Bitcoin going to 126k. So it's a clear area that should hold now when coming back to it. Previously, we were only managed to retest the top end of it on the tariff crash. Now we're starting to trade within it. So, safe to say it's a bear market. Safe to say we need to see some sort of reaccumulation period, much like we always have on BTC, which can look a number of different ways. This is just one example to show you guys time-wise how long it can take to form a bottom. That's why you've got to be able to survive. That's the number one thing. And then you can thrive because you can accumulate assets at cheap prices if we are lucky to get that scenario. Main thing is, as long as it doesn't lose the low, so 49k, then the structure is all intact. Because yes, we've broken this monthly market structure and we've lost the tariff low of that structure. Therefore, we are in a bearish phase. We are in a liquidity contractive phase. There's definitely been liquidity that's left the system, but that's what happens. Markets go from bull to bear, and that's where all the opportunity lies. If there wasn't swings of emotion, swings of liquidity flows, there wouldn't be opportunity. There wouldn't be such a great change in price from bear to bull. So this is the game we're in right now. We've had bearish confirmations, but now we're coming back into previous high time frame bullish reaccumulation zone. And as long as we don't lose 49, anything in between, really, the current low and 50k, let's say, is your ultimate buy zone. That's where you're going to get the best bang for your buck. And it could look like that. We could rally first and then come into it. Many different ways you can form a bottom to really screw people over. And maybe it is going higher first that will mess people up and it can look a little bit more messy rather than your classic bottom where you keep pushing lower and failing to go lower. Overall, if you keep the mindset of accumulate between this zone, at least that's what I'm going to be doing, I think you'll do well, as history has proven on Bitcoin. And as long as it doesn't lose 49, because then you're toying with the idea of filling in this gap, which I don't believe should fill in, because bear market gaps never fully fill in on Bitcoin. If it is going to be in that adoption curve, you always leave a bit there. And since we have now got institutions, it's not the same as last cycle. We don't have crime, FTX, Alameda Research, 3 Arrows Capital. We've got Wall Street coming in, nations coming in. we shouldn't start now filling in your bull market gaps. We should be holding above them where they previously reaccumulated, where we know they were having the biggest inflows, where we know on net that Wall Street was just about getting happy with allocating 1 to 2% of their portfolio, as Larry Fink recommended with his BlackRock ETF. So that's the game. Don't get bearish as price goes closer towards the 50s. Maybe we don't even get that low. Point is, we're in a place where bottoms tend to form on BTC. And looking at the flows on Bitcoin versus other assets, well, you're starting to now see relative strength. This is the sign, this is the signal, the huge indicator that I've been waiting for. Red month on stocks, S&P 500, green month on Bitcoin. Starting to see liquidity now flow into BTC instead of flow out of Bitcoin into equities and into metals like we previously seen during the downtrend, during the crash. So this is a sign you need for markets to actually start bottoming. Much like this candle over here. This candle, red on the S&P 500. Bitcoin, it was a green candle. Relative strength. What does Bitcoin do? The next month, it literally breaks out to new all-time highs. Because it has that show of strength. And if you can recognize that show of strength, that's where the best opportunity lies. Stocks only made new all-time highs a month later when Bitcoin started stalling out over there. So you've got the clear sign now. Now it's not as strong as previous. You don't have a nice full-body candle with stocks red. Instead, you have stocks with a full-bodied red candle and Bitcoin with a slight green candle. Doesn't show that we're going to go to the moon, just up only, but it does show that with bottoms forming across Bitcoin and across potentially the stock market, if it can eventually find a floor, Bitcoin's best poised now to have its rally. And it's just so simple, guys. When you've had 5 months in a row, the only setup to look for from a swing trading perspective is long, because the time to be short was after the false breakout. If you didn't get short there, it would have been after the breakdown. If you didn't get short there, it would have been the next candle. The next candle. It's not now that we've down 52%. That's, pretty self-explanatory, right? I'm sure we can all agree the best shorts are behind us on Bitcoin when it's down 52% from all-time high. Because even if this is going to be bearish, it makes sense to have a long trade into the 90s. If we're going to go for a lower high and put in a proper top and start filling this gap in. I don't think we will, but point being is bearish scenario, path of least resistance is up. Bullish scenario, path of least resistance is up. And that's in the multi-week, multi-month time frame. Remember, a high time frame outlook, not speaking for the next days or weeks ahead even. We have a bunch of gaps here to backtest, and that's where sellers can then show up. And we either reaccumulate or form that lower high. Now, I think reaccumulation, I'd bet my money on that, as you guys know I am, and that's what I think is the highest probability. But point being is it makes sense to look for long sabs, given you're seeing that relative strength from Bitcoin on the high time frame over stocks as well. That's just the cherry on top, the further signal that you really need to show you that Bitcoin, positioning wise, longs are wrecked, and that means the path of least resistance is to now take out the shorts. Whereas on stocks, it was at all-time high, so positioning shows that longs are in profit, and that's why they got wrecked last month. And eventually positioning will change because the markets is just a game of liquidity rotations. And if we look at Bitcoin next to gold, similar story. March closed with a huge red candle engulfing all of February's gains. March closed green for Bitcoin. This is the biggest sign of relative strength we've literally seen in months, maybe even years, to be honest, because Bitcoin topped out in July when gold was still breaking out. So it literally has been over a year. It's a huge signal. No one's talking about this because no one wants to talk about relative strength to the downside. Everyone only wants to talk about it to the upside when everyone's bags are rising. But all the money is made, the best opportunities are made when you're seeing relative strength to the downside, because that forms around the bottoms, not during the trend or mid-trend. So great to see again on BTC. Liquidity is not flowing out anymore. It's now actually flowing out of gold and flowing out of stocks. Bitcoin's holding up. This is the moment where you have to have your eyes peeled on the high time frame to visualize this better. We've got Bitcoin against gold over here. Green month, exactly what you want to see. As long as it can bounce at new cycle highs and form a higher low, then it's on an adoption curve against gold, and relatively it's growing in strength against gold. That's what you want to see. You want it to bottom out anywhere here going into the next few years and not make new lows. So far so good with that green month. If we see Bitcoin against stocks, it's even stronger. There's even more of a strength shift from Bitcoin over US equities, which is great because equities are huge. The S&P 500 is huge. 500 biggest companies in the world or in the US, which is all that matters at the end of the day, as long as they're the superpower. The fact that Bitcoin is, potentially going to be forming a big higher low here. Yes, it may go lower, but you're quite some way away from the previous cycle low. This is strength. This is flows now choosing the new generational asset. Very good for the prospects of the next cycle. Again, people don't talk about this because it's a bear market. No one's excited about relative strength to the downside when we're 52% down, are they? But you guys are, because you guys are smart. You guys are watching my channel, not the clickbait stuff. So props to you. If you do enjoy this channel, make sure you slap a subscribe. Let's absolutely crush the next year. And that really is the monthly flows wrapped up. Now I'm going to dive into a setup focus for this monthly outlook. So setup on Bitcoin remains the same on a high time frame. This one that I've talked about. Monthly 50 EMA. It's holding so far. On the closes, we can see that anytime it goes below the 50 EMA, it gets bought up. So on the low time frames, that tells me that any sweeps of this zone, that's a long. If we see a sweep, reclaim, break a structure, get long. We've stop defined at the lows. And that might go for a double sweep. The key is as soon as you get the break a structure, stop at the lows. Or you can try twice and you can take a loss on this idea before you get to the win. That's fine as well. Point being would be monthly is set for some mean reversion bounce. If we take a fib from high to low, bounces just back to the 0.5 can still be bearish. And if bullish, as I think it will be, you're going to form some sort of large trading range. Maybe we just get this and it's a bit more choppy and we spend longer at the lows. If so, great. More time for a high time frame accumulating if we don't get bounces to the 0.5. But if we do in the coming months, then that's going to be a great place to TP. And it makes sense as the path of least resistance just to backtest some of these gaps. It may well end up going to a 0.75 and continue on from there. The point is, it's not the place to be looking for shorts anymore, down 52% from the highs. Swing longs are definitely going to be the play to look for. Just waiting for the setup essentially in Bitcoin to have some sort of retest of the lows and show its strength. And then you've got all of these gaps to now trade into. This is the weekly time frame now. Got gaps up to 85k. Really, if you get above there, you can actually hold there. Then you're looking at price coming back towards this liquidity at 98k. So that's going to be an interesting gap if we can and when we do get back to it in the coming weeks, coming months. You've also got the 50-week EMA there, which is currently down sloping. So definitely a bearish market on the weekly, of course. But you're just at a point where from a mean reversion standpoint, the downtrend has lost momentum. We've seen that. So that's why the best setup is if we try make new lows, fail, confirm that the downtrend has lost momentum by failing to break lower, where it previously hasn't been able to do that. That's going to then be the sign that we're ready for that mean reversion rally on Bitcoin. And that's going to be the setup then. It's looking for those swing longs based on the demand that's been coming in and clearly shown on that monthly 50 EMA. So that's the setup there on the trading portfolio for BTC. Now let's dive into some altcoin setups. Tau, this has been one we've been watching, so let's dive into it. After having a couple legs higher and getting shilled everywhere online, it has started to top out. The signs were there with this momentum loss candle over here, and most importantly, retesting the breakout level so soon. You guys know on Bitcoin, shared it with you guys previously. When we had this breakout on Monday, immediately on the Tuesday, you retested the breakout. That was a sign that it's weak. Because strong breakouts don't retest the next day. I can show you guys. Oh, here, prime example. When we have a breakdown, doesn't get retested. Blue line stays clear. And you get continuation lower. If I can show you a bullish example. So here we have a breakout. Doesn't get retested. That's why you go so much higher. Strong breakouts don't go for retests at all, let alone the next day. So when it comes to Tau, it's in a bearish setup here. And you'd be expecting this chart to go lower. Now, can we get a squeeze back up to this daily imbalance zone? That's one thing I'm going to be watching here on Tau. So we've got a daily imbalance zone over here. And to the downside, if we go to the weekly time frame, we've got a weekly gap over here. So we'll put this out, weekly gap, we'll mark this in blue. And that really sets up the bias for trading. So any rallies on Tau up into the daily imbalance zone, I'll be looking for shorts. That's where I'll be looking to manage risk, whether it's from here or if it's coming out for a sweep. I wouldn't just blindly short it, but if it gets into the daily imbalance zone and on low time frames, I see signs of it reversing, I'd look for a trade, managing risk, targeting some of these areas below. So that would be trade number one idea on Tau. Now you also have this weekly gap over here. So I'll be expecting some sort of initial reaction if we do hit that gap, even just for a mean reversion play. You can take a fib from high to wherever the low ends up being, and I'd be looking for a trade then from that holding, if you see signs on low time frame, towards the 0.5. Very simple. So those are two ideas really on Tau. Not expecting trends, expecting mean reversion here after the uptrend has clearly failed and lost momentum. Hype. This is another one we've been talking about. So daily imbalance zone is above. We've got the clear 2024 high pivot level, which has been an extremely important pivot level. We've come into it before, tested it as resistance before, now coming back to it, currently trying to hold it. Hype really went into distribution, everything above here. This was all just rounded top, rounded top. The trend stopped on hype over here. That's when the trend actually climaxed. Everything after it was just take the stops, distribute, dump it back down. Take the stops, distribute, dump it back down. Take the stops, distribute, dump it back down. That is not a trend. Trends go mark up, consolidate, mark up, consolidate, mark up. They leave gaps. This is anything but that. The trend on hype ended here. So everything over here in the 40s, in the 50s, is an area where you have to look for resistance. So it's no surprise to see it has actually found resistance here. And it has come with that news event failure, which I talked about. And it now is a failed breakdown. So on hype, bias for me is simple. Go to the daily, zoom in a bit here. Imbalance zone above. We now actually have a couple imbalance zones. You've got one over here as well, where I'd be watching for either a short rally up into this initial gap over here. And if that can hold, and we start losing the 2024 pivot, I'll be looking for shorts back down. If we trade above it, can hold it as support, then I'll be looking for extended rallies into the upper daily imbalance zone for shorts. So there's two ideas on hype. This one, I'll be waiting for more confirmation as it's a shallow bounce. So I'd want it to see losing that 2024 pivot very clearly. That sets up a potential short. And this one, much simpler. If you see low time frame reversals around the upper daily imbalance zone, be looking for shorts back down. Mean reversion again. Not looking for long trades, because I think the overall target for hype will be to fill in this daily gap over here. This is the origin of the trend. And I think when it all is said and done, it's going to chop and it's not going to make its way down there in a straight line, but that's where it wants to go. And that can be where it then does find support. Who knows? So those are the ideas for hype. And look, maybe it does just trend up to 50. If so, great. But for me, don't see the conditions for it. If it was going to be bullish, it wouldn't have reacted negatively to that bullish news on that day, 17th of March, and it wouldn't just be bleeding and going below the breakout level, so easily. And it is coming at a place where it should probably be distributing. Has it accumulated enough? Has hype spent long enough building a base for a rally to auto highs? I'd argue no. There's not enough price action here. It probably needs to come back down, fill in that gap, maybe chop around here, and then break out later on. Cause and effect. Once Bitcoin's broken out as well, once there's more profits in the crypto system, because that's liquidity positive for these altcoins then, rather than where everyone's just wrecked and taking their money out, which is liquidity negative. So it's very simple. Those are the setups on altcoins. Bitcoin, to give you a similar view with this chart, with the pivot levels, let's dive into it quickly. So you guys know, looking for longs, as I said, but to actually give you a bit of a more detailed view regarding the longs that I'd be looking at. So again, Q2 so far, bearish reaction. So I'll be watching for Bitcoin to come into this daily imbalance zone, ideally with a sweep. I'll be looking for trades up towards inside monthly high. So inside monthly candle, which is 79.4K. We're trading inside of that month of February still. So that's a clear target. And that's based on the reaction to the inside monthly low. So go to the monthly chart. We take all of this off the screen. You can see March traded inside February, and currently April we're trading inside March and February. So I'm marking the low and high from that February candle because that liquidity is now building up. And that's why I would expect a reaction at the low to take a long and potentially trade that up towards the high. Pretty simple stuff. And from there, I'll be watching because you're then coming into this weekly imbalance zone above, which is where bulls tried to accumulate Bitcoin, failed. So that's an area where I'd definitely look for TPs or longs. That's where resistance should show up. And it is right in that bearish gap I showed you earlier. Get above that, hold it, then sure, you're looking at 97K, you're looking at 100K. But while you're below it, while it's untested, I'd expect that to provide a reaction initially so far. So you've got on Bitcoin, long setup. If we can sweep the lows and reverse, and short setup on really the first test of that weekly imbalance. So I think that's where sellers are going to show up. Sellers aren't showing up at the moment, so we may not even get this dip down first. It may be the other way around. We may have to go higher before we go lower. Watching that pre-war level as you kind of pivot to see if Bitcoin goes below there, then sure, looking at sweeps of the lows. But if Bitcoin can retain this high-low structure and remain, then I'd be looking for it to actually maybe even go for that path first and then this one after. You guys get the point. So I'd be looking for long sweep of the inside monthly low, shorts if we start hitting that inside monthly high and getting towards this weekly imbalance zone. Very, very simple. Those are your areas of high interest for the weeks and months ahead on BTC and your altcoins. So that's Bitcoin, that's altcoins. Let's dive into some TradFi setup. So S&P 500 got these pivot levels marked because they're super useful. Previous all-time high, 2015. Exactly where you come back to in the bear market crash in 2020. Previous all-time high from 2020. Exactly where you come back to in the bear market of 2022. Just slightly front-running it. Previous all-time high from 2021, as we know in crypto, but it was actually 2022, where stocks topped out a month later after Bitcoin. Exactly what we retested in the tariff crash. Not magic. And right now, we have exactly the same. So take these black lines off for a second. We've got this level over here. I should be expecting any retest to hold. And that can set up great swing long opportunities on the S&P 500. It's been an absolute printer getting long on any of these pivot levels. So I'll be watching 6146, any price action coming into that area, looking for longs. Sure, if we break that area, we can look for deeper corrections, and that's likely going to be recession territory. Hold it, expect more of the same. Simple, you react. That's the only game as a trader. You react and make money. Do I know if it's going to hold it? Do I know if it's going to break it? No. But I take decisions with probabilities, assigning risk management, and you can make money either way. Now, we do have some interesting levels from the JPM collar trade. Essentially, JP Morgan, to manage their equities portfolio, manage the risk of it, they have a short call, long put, and short put that they openly put out to everyone every single quarter as the biggest trade ever. Huge amount of funds, obviously, to hedge their equities portfolio. These levels can be interesting and something I'm going to be looking at. So, essentially, to put it short, if we see stocks squeeze into 6840, you would expect that to reject initially, get above it, and that's when you're off to the races. And the long put actually is sitting right at that pivot level, which then gives it even more validity for it to hold. Lose the long put level, and that's when you can actually start seeing deeper crashes. But expectation is generally for the long put level to hold. So that's what I'll be watching for on stocks. They've had a corrective period right now. The weekly candle is actually now engulfing almost the previous week's candle. You've got so much liquidity building up here that you're at a point where is everyone just hedged for this war? Because you're 4 weeks, 5 weeks into the war now. It's not crazy to be a bear anymore, and we haven't seen extended breakdowns. So, max pain scenario, just something I'm going to dive into right now, could potentially just be up, at least in the coming weeks, because once stocks get back to here, this is where everyone's going to make bad decisions. Because, first of all, where are we? If stocks are trading here, you're right in the middle. And as you guys know, you don't diddle in the middle if you like money, basically. Because problem is, if stocks rally up to the 0.5, you're in a position where if you're a bear, you're like, do I need to get rid of my shorts? You're starting to see the stock market rally, and everyone thinks stock market just goes up only, because it often does. As a bull, you're then thinking, okay, what if we do just go up only? Do I need to get long? And what often happens is it will come up to that 0.5, have everyone make bad decisions, and then it will go lower from there. And maybe that's when we find support and finish up the correction. That's why markets will go higher sometimes, because it can actually be max pain. It can make everyone think their shorts are all wrong and they need to flip bullish right at the worst time. Because what if it does go like that? So often markets will go to these places where everyone says, what if, and they'll get positioned poorly. So I wouldn't be surprised to see a bit of a hated rally coming, especially after this little show of strength here on stocks. And if we look, 200-day EMA, currently backtesting it. So, at that final level where we either reject here going into next week, or if you start flipping above that 200-day EMA, you're probably going for that scenario, as I said there, where I think it does come back for a retest of the lows eventually. Whether that holds or not, I think it does, at least initially. You're either seeing go lower, or maybe that is where it bottoms out then on stocks, because you've seen a lot of the worst of it. Everyone's hedged for it. I think rallies in the short term coming weeks should be no surprise. Then you're watching the retest of the lows. Can that hold? Or are we going to get that beautiful retest of the pivot level and that extended bit of downside in the stock market? That's something that I'll be watching. That's something that's interesting. If we look at the VIX, it's below that 30 danger level, and it's the first time we're actually starting to see a bit of a breakdown on it. So what you really need to see is it lose the 50-day EMA, which has been the EMA it's held this entire time. Lose that, then we can actually maybe start seeing risk on, and potentially stocks have gone into one of those bottoming scenarios. And maybe we are going to go into a lower volatility period where these markets can actually rise. Because these risk markets, they don't like volatility. Investors flee their risk assets first when volatility is high and uncertainty is high. And if markets are bored of the war narrative, eventually markets will just adjust to the fact that a war's going on. The same way Russia-Ukraine war has been going on for some time, but markets adjusted. Still going on now, but eventually the narrative's over. The positioning for the war has been positioned for. And the stocks markets, well, that war happened in 2022, it began, I believe. And they've gone higher ever since. So could this war end up being the same, even if it does carry on? That's why time is never a bear's friend, because every bear has a liquidation price. So if it doesn't keep going lower and it doesn't make new lows next week and fully engulf the candle, then you're in for a bumpy ride, it looks like, even if it does eventually go lower. Where you're going to see more bounces, you're going to see shorts get stopped out more, and maybe it doesn't even go lower at all. Maybe this is just going to be accepted now in the market. So something to really look out for as your max pain scenario. Because what we're seeing here is biggest bearish catalyst for the stock market has been the US 10-year. So government debt. Yields have been rising, which means the demand for government debt is falling because they want a higher return for it. Can this start breaking down? Which is going to be something that you've really got to watch out for, because right now it's been trending up and that's been the main catalyst for the stock market falling. This is the chart that actually matters for the Fed. And of course, most importantly for the US Treasury, Scott Bessent. He's the one who manages the US debt market. But when I say this is what matters for the Fed, is because this is when the Fed intervenes. They intervene when the bond market, which is what holds up the dollar, is starting to look bearish. And that looks bearish when yields are rising too hard. So it's going to be a very interesting time, really. I'll be watching the high and low of last month's candle, March's candle, to really dictate the price action for the coming months. What you want to see is if we push to the highs, it fakes out. Risk assets will likely rally. Push to the lows, that will initially lead to risk on, but then you need to see it break down for further extended risk on. That's going to allow stocks to rally, markets to bottom out, and assets to have that liquidity positive environment again. So that's what I'll be looking at when it comes to these assets. And a quick look at oil. Not one I typically trade, but on the lower time frames, we've come into a range here on oil. And I'll be watching this imbalance zone. We're rallying up on US oil, so CL if you're using the CME ticker. I say any rallies up into that imbalance zone, potential shorts. That's what I'll be looking for. Again, if you see low time frame reversal setups in the trading week. So I think retests of this unretested zone can definitely lead to move just back to this gap, even if it's going to continue being bullish. And that's, where you can then form a higher low or form the bearish scenario. Either way, sets up for a decent short on that first retest because you've got a nice gap to trade into here. The times you want to short is when you've got a gap to trade into because it's inefficiencies below that likely get filled in and retested. So that's what I'll be looking at for your stocks and oil. And lastly, gold TradFi setups. Let's dive into it. So gold, very, very simple one. Where is my chart of gold? So we've got 5K, we've got 4K, which are your big round number levels on gold. We go to the weekly time frame. So we can see weekly has shifted into a bit more of a bearish phase with that engulfing correction that we've recently had. We've come into the 50-week EMA for the first time now. So we're bouncing. And I'll be watching bounces up towards 5K to fail. And I'll be watching for the retest of this daily imbalance zone to hold. 2 trades on gold because I don't think we should get back above 5K and let all of these badly positioned people over here get out very easily because this is what they want. They want gold to just rally and go straight up. And that's why what often happens is when you get back up to previous distribution levels, you'll at least fail it on the first test. And you come back for a retest of this daily imbalance wick. And that's where I'd look for potential swing long. So simple one on gold. Come towards that round number of 5K, show signs of topping out. I'll be looking to trade it back to the daily imbalance zone and hold that zone with a clear bottoming structure, something like a double bottom. Wait for the breaker structures, wait for low time for reversal signals. I'll be watching to trade gold back towards 5K because I think the first retest of this should hold. Because everyone just wants trends now. And everyone just wants either straight up or straight down, but volatility was too high over here. And now you're likely to go into a volatility compression period on gold because of that and because it's been up only for so long, where it's short-term trading. Holding has been rewarded for years. And ever since retail got excited and you got this leverage liquidation day, holding became not profitable. you have to switch to regime, and that's why I'd be expecting those mean reversion setups on gold. So that's the market update. Dollar 100 level, very important for risk on and risk off. If we're going to finally start closing above the 100 for more than, just 2 weeks or 1 week as previously, that can set up further risk off, and I'll be watching this liquidity target for the potential end of risk off if we can top out, or if it's going to get really violent, we're going to start filling in the gaps towards 104. But I would put it more likely that we'd top out after hitting this liquidity if gold does want to go higher. Lose 100, and we're back to risk on. So 100 is that very key level on the dollar. Sorry, I'm not sure if I said gold there. You could see it's previously a level that acted as support, now resistance. So, start getting back above it and squeezing. Got a bit of risk off coming in. And that can lead to risk assets bottoming. That's great for these markets if you want your cheap assets to accumulate. And if we're going to get risk on rallies, you're going to lose 100. That needs to happen for the show of weakness. So that's the monthly outlook, guys. If you enjoyed this, make sure you smash the subscribe. Help a small growing channel. Make sure you're logged into YouTube. It's all I ask. One click of a button. Please go do that now. Drop a like and comment if you enjoyed. See you in the next one. GM.